Hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Here we go. So, no trade call recommendations. We're responsible for their own stuff. We're here for educational purpose only. So, back after a week off, and nothing much has changed really. So, we thought the everybody was calling for the world to end, and essentially, not an awful lot happened while we were away, right? I think one of the most interesting things is still that we got this, what we call the gift from the gods from Elon essentially playing out, right? We talked about this in detail on the other video, but essentially what Elon did when he put that 420 target on the stock is essentially give us a very, very nice semi-defined risk-reward play, right, on the short, which is not there when you're just naked short where something like this isn't going on. So essentially here, this with the market hovering at fairly classical, right? 10% discount price to what the deal should go through if indeed it was going to go through or not, gave you very nice opportunity to get short with, worst case, something like 10, 11% risk to the upside. But if, as we thought, it was a pile of BS, at the very least, all these gaps to fill and a move back down into this level. So, a 1 to 2, which is really better than a 1 to 2 because we'd expect to be able to get out better than that on any kind of squeeze. So here the trade is in play. We'll have to see what happens. A lot of shenanigans, but we consider, just for those of you, I talked about this here and there. So our primary target pretty much done here. Extension target would be back down into the just sub the 200. And again, the cherry on the on top of the cake would be, single digits. But again, we're not yet there, but it's not looking too good. But in any case, it doesn't matter whether it plays out or it doesn't play out. The trades, anything more from here is gravy. Now, the other thing, which is, again, just to look at this quickly, because there's not an awful lot. If you're looking at equities, so let's look at SPX. As far as I can see, and again, I've been keeping an eye on the charts here and there, but essentially it shows you how much what the difference is when you're really detached from the charts and the commentary and just look back on them. So I'm sure there were times this week when people thought these were going to crumble and times when these were going to rip back up, but essentially we haven't really gone anywhere, right? Here we still have this pattern here where we got that gap up and the gap back down, and we're still hovering here. Remember what we said? We wouldn't be surprised if we spend most of the year stuck inside this range. And this is still the way we're trading. Now, the way the market is looking here, it looks like it wants to take another stab higher. So this is the classical pattern. We'd say if it's going to fail hard, it probably wants to fail from a higher level. But, I think here the signs are that even if we do press higher, we'd still favor looking for short opportunities as the market looks a little bit weak. We'll have to wait and see. But again, Dow still trying to stay bid. Probably the Russell is the one who's going to guide, as is one we've been looking at very actively. And if you look at the NDX, right, we're still stuck here, not as strong. Remember what we've discussed as far as we're concerned. Tech is broken, right? Something's broken. Netflix, something broken tech, and as far as we're concerned, the break started with Netflix. So this is our control chart. So again, our base case is still here that after this pattern back down, short into the 50 back, we're seeing this start to roll over. So you see how it's still having trouble. The rallies are getting sold. So here, any kind of bounce into the 330s into Netflix that can't hold a bid, and our next target is 28,286. And again, this is a very classical. We've said all these tech names, you can buy the dip as long as you want, but when you start seeing these big gap downs after those earnings, these ugly moves like Facebook, stuff doesn't tend to just rip back higher in the way it used to in the classical sense. Right. And the other thing we talked about, look at those names, other big tech names out of Asia. I mean, look at Tencent. this is a really, really ugly move, right? And we've been talking about this for a while, and it seems like the market's having trouble. Look at BABA. And again, I may be a bit off on some of these because again, I haven't been in front of the charts for a week, but they're just all things that as soon as I come back, first things I want to look at, because these are things, we've been talking about for a long time. There's something that's not quite right. So again, we think the pain to come is on the tech side, and that's what we would really be focused on. Now, again, I don't want to make these videos too long, but let's see. Actually, I haven't looked at this yet. What is the Shanghai doing? Because that's the, it's still in this danger zone. We've been looking at it on this weekly, right? If you remember, we said chop, chop, danger zone. As long as it trades in here, our base case is that it's heavy and it's going to try and break below here, and there's going to be a serious flush here. It's still choppy, but this is it only, our view on the heaviness across the board on the NASDAQ, etc., only changes really if the Shanghai trades back above the 3,000. So again, I see this is also still trading very, very, very heavy across the board. Now, the other thing you have to keep in mind is, the big thing to keep on the charts here is, the dollar index, right? What's going on with the dollar? Well, I see that the shenanigans in Turkey, etc., have been in full force. But look at what's happening. Look at this. Look at this reversal here. Let's look again. And, everybody talked about that 7 mark. Then everybody talked about the same 7 mark on dollar China, on the yuan, right? Look at this. Look at this weekly reversal. You have to pay attention to these weekly reversals, right? And it's the same chart across the board, or at least on most of these. So if you look at the DXY, where are we? There you go. Weekly reversal there. So they were just pretty much at the 50 back from the move from lows to highs. So this is the big question, is what's going to happen on the dollar index. Now, our favorite chart in terms of playing the dollar index here, or the dollar in general. I shouldn't talk about the dollar index because that's mainly euro, but it's still the short on yen. So this hasn't changed our base case assumption here. After this reversal, we still think this is going to slowly try and make its way much lower. And again, we need equities to cooperate here. But you see how it hasn't really moved, even though we've seen some wheeling and dealing on some of the other pairs. So this is still fully in force. We still expect this to try and probe lower. And this is our favorite way of looking at this. Now, don't forget, positioning is really skewed on USD CHF. So that's going to be another interesting one. But also look at Aussie. Let's look at this Aussie chart. See, this is what we were looking at. We said this is stuck inside the range, and we really have no interest in being aggressively long or trying to get long unless this starts to base, but be patient. And you see here, it looks like the opportunity has come. So here, this is definitely not the kind of pattern you want to stay aggressively short in. If anything here, you'd expect a little bit of a basing and pop. If it can break above this trend line, then it's likely a sign that everything's going to squeeze up. Also gold and across the board, you'd expect a lot of sellers to try and come in and hold this aggressive move down. So sellers coming in at the 74s. But if we get daily close above the 74s, then you'd expect this to try and rotate higher. And another one from memory that was getting whacked hard before we left was Kiwi dollar, right? So you see here, same on the Kiwi dollar. This is not something we'd be too interested in trading. We'd much prefer that Aussie. But you see here, it couldn't base, it's come back down. So here what you want to look at is it going to make its way back into 68? If it can get back above, you'd expect a very aggressive squeeze. Here, the sellers should and will try and come in, likely try and come in at these 68.00. So everybody's talking about the, also which dollar index, you can't talk about dollar index without looking at the euro. And here we're kind of, it's stuck around this level. I would assume that all the shorts are going to try to smack this down as we move back into that 115, 115.50. Now, our base case here was that this hold was going to try and come back and test the opposite side of the ECB range. So clearly that did not pan out. There's still plenty of opportunities to trade this to the upside, but it really didn't pan out the way we were looking at it. We expected another aggressive test back into these highs, and then we'd have to see if we're going to stay in range or not. So here, what you want to look at in euro is expect the shorts to want to keep the pressures on here, right? So as long as it can't get back above the 115.00, 115.50, then this dollar reversal may really not have much room to run, and we're back to more of the same, with this being the key support for the week, and the market will try and press lower. But if we get a daily close above the 15.15, do not be surprised to see this trade back in the 117s, 118s relatively quickly. So again, I think that's the cable. A lot of people, what's going on cable? I see that cable's still, we've talked about this. There's very tricky to try and be aggressive trading this, simply because of the event risk on and the negative news flow on the Brexit. So sooner or later, this is probably going to be a very, very nice long. It's just not something we would be focused on right here, right now. If you're looking at it in terms of where we are on the chart, you see following the beginning of the shenanigans, and we get this big puke here, and then we kind of stuck, right? We stuck looking for something to do, then we broke up, then we started that move all the way back up, and then we got smacked down. Well, essentially here, the way we look at it, the fact that we're holding below this area means it's heavy. Similar to what we talked about on some of those other things, we'd consider this the chop zone, right? So in terms of structurally, we'd be bullish back above this zone, and we'd stay bearish below this zone. As long as we get back in here, we'd consider it to be very choppy trading, and we would favor just tactical plays. But in any case, because of the headline risk, we'd favor tactical plays and not any overnight holds here. Now keep in mind that as we go towards the back end of the week, we're going to have that Jackson hole, so we'll have a lot of Fed speakers, so there could be an awful lot of wheeling and dealing across the board, so a lot of headline risk also into the next weekend. Now let's just get back to this. Russell, this is the chart we've been looking at a lot, and I really think, as we've discussed before, as long as the Russell can hold these highs, then I'd expect those moves on the Dow and on the ES or the SPX to potentially be flimsy, or wouldn't trust them. Now, if we get a situation where the Russell trades back above these highs, and you see the other indices trading highs, so then I would really be careful about wanting to stay short or trying to be stubborn to the short side. But right now, I still think if you're in trades on the Russell, it makes sense to still stay in and manage tactically. But really, the one to focus on are the tech names. It just looks like Apple is still propping everything up, but that's the one to focus on. Now, again, I didn't want to make this too long. If anybody has anything they want to look at, shoot, I'll post it. I'll start getting into more charts tomorrow again, but I think here the focus for the week, or at least as I was on the plane back, I was jotting, making some mental notes, and I had 4 points. Essentially what I said is, it's the key focus is going to be NASDAQ and those tech names. Then you have to keep your eye on what's going on, with the USD TRY, USD CNH, because that's a good barometer. We discussed that in the past weeks to keep an eye on that. Then the general USD and the bonds. Actually, let's look at the ZBs. So if you remember, on the ZBs, we traded short, and then we flattened out on the shorts because we said just too much event risk. We just thought these were going to catch a bid. And so you see they got a nice little move back up. So here, nothing much has changed on the bonds. I still think if you're if you're looking at the bigger picture, you probably want to stay short. But if you keep in mind the extreme short positioning, the event risk across the board, the geopolitical risk, it's really not something I'd want to stay short. So no change really. This is the chop zone like we've seen on a lot of the other charts. Very, very bearish below, bullish for a squeeze above, but inside it's just tactical trades. Very hard to read too much into what's going on. So we said NASDAQ and the tech stocks, the TRY, CNH, I said USD and bonds. And then the last one is you got to keep an eye on gold right here. So gold's getting no love at all, no love at all, no love at all. And here, a lot of people are talking about the fact that it looked like it was trying to put in some kind of reversal at the end of the week on Friday. To me, it still looks heavy, right? It still looks heavy. What you want to watch here, which is also going to be in line with the general, view on DXY and what's going on the dollar, is if you see this trade back above the 1200, the squeeze, because of the severity of the move, because of the positioning, etc., the squeeze back into the 1250 could be extremely painful and aggressive. But the way we look at this, unless this trades below the 12, unless this trades back above, so as long as it stays below this 1200, it just doesn't really make sense tactically for us to get long intraday, to try and look for longs, because likely that 1200 is going to be a tough nut to crack. Now, it depends. If you're looking for seasonal plays for the next 2 months, if you're looking for this to uncoil and you're trying to build a position and you're looking, so position trade, bigger time frame, then this makes sense. Clearly, anything down here, anything all the way down to 1150 or 1100s is still an interesting long. If you manage this properly and your sizing is interesting to try and build a position. But if not, just going into the week, if we have to look at what's the outlook has to be bearish below 1200 and bullish for a little bit of a bid to come back in above the 1200. That's the only way we would look at it. Okay. So guys, good to be back. Can't wait to see what's going on. Get back to the webinars and stuff. Get back on posting some charts. Wishing everybody a great rest of the day, an awesome weekend. Take care and talk to you guys soon. Bye-bye.